Okay, we'll open it up. I guess I'll use my prerogative. So, majority of people, myself, I've never done my own taxes. It seems like it should be quite fair. I interviewed Bill Bradley back in 1986, and Bill Bradley said to me, the reason we have tax reform, we all have spouses or wives, husbands, whatever. And they say, what did you do in Congress today? We have to say we did something. So we have to have tax reform. So we have tax reform over and over again. So you said tax reform has to be fair, but fairness is a subjective term. So how do we get fairness to be an objective term? We get a tax policy that actually would please most people.
Well, there are two things. Number one, as far as Bill Bradley is concerned, another aspect about tax reform, it's worthy to be at the top of every agenda, but it's never worthy enough to be enacted in law. And the answer, it's never going to be permanent. So that's the first thing that we ought to focus on. And with these three conflicting goals, it will continue to change. I mean, as you pointed out, fairness is in the eye of the beholder. And I'll give you a perfect example about the fairness issue. And I was on the other side of Senator Bradley and Gephardt in '86 because I was opposed to the '86 Act and I was for the '81 Act. And we were able to prevail in '81 and '78, which was a shift on economic growth, because the American people were more concerned about a job than they were about income, about how much certain groups pay. And I'll give you a specific example. I don't know if you remember Ken Holland. Ken Holland was a Democrat from one of the poorest constituencies in the United States in North Carolina, and one of the least educated. And he went to this very income-depressed area and not as educated and said, I think we ought to reduce capital gains taxes, even though the president says that it's windfall for millionaires. And they bought it. And they bought it for two reasons. One, they believed in the American dream and somehow thought that it's fair to allow people to accumulate and reach their own destiny in terms of being successful. And secondly, the people in that constituency also thought that lower capital gains taxes, lower taxes on saving investment, was somehow linked to a new lathe and their job. Now that was the situation in 1978 and '81, but when Bill Bradley succeeded in '86, the focus was less on that and it was on the W. Bozenak concept.
Okay.
Okay, go for it.
I just want to put some of the numbers together. So you said that 47% of Americans don't pay any income tax, and if we have about 50 million Americans who are below the poverty line and 51% of Americans who are just in between, kind of teetering on the poverty line, that puts us at 100 million, which is about a third. I don't know how a tax on consumption would affect those 100 million Americans. Isn't the point of the graduated income tax to kind of protect that large portion of our society?
Well, first of all, you raise a very valid point. A lot of those people are not paying income taxes because they don't have any income.
Right.
Okay. And as I pointed out, they end up paying Social Security taxes. So that's one part of the problem. But there are two distinct views. What you can do is you can, somehow reduce taxes and have a flat tax in terms of the rate, or what you can say, if by some chance you want to tax the wealthy for a variety of reasons, why not tax them on their yacht? Why not tax them on their mega mansion? Why not tax them on the jewelry? In other words, getting back to Hobbes, if a very wealthy person wants to put all his money in a startup, that's an extreme example, or invest, that's the distinction I'm making. Because fairness, of course, is a very slippery slope, but I think it's a lot, if the extent to which you put money into the economy, that creates jobs. So I'm making a distinction which I can get in trouble with my business constituency by talking about the base in addition to the rate. Does that make any sense? All right, Should I go further? Why don't you just go further on it? You're saying it's unfair. We've got a lot of people who are desperate.
I'm concerned about how the tax on consumption.
Okay,
because
okay.
The people who are at the bottom.
I'm sorry, I didn't
spend
answer that.
most of their
I
money.
didn't answer that. They didn't answer that. If you think about a consumption tax, think about, well, you know what a value-added tax, but think about a retail sales tax. So I would favor progressive retail sales tax. So here's what I would do. Number one, I would either exempt folks, I would exempt the tax on necessities. Or what I would do is I would have a threshold, assume the poverty level is X. I would make sure, as you know now, you get refundable credits. So that's not only necessities, because I'm real old, and you could say jeans are a necessity, but you know, suppose I'm an old guy, very rich guy, and I've got a stomach that's 42 degrees, so I go in and say, so necessities may not work as well. So you can have a refundable credit at the poverty level. Or what you could do is you could do it through direct spending. Why am I going through all these contortions? And that deals with the progressivity issue, right? Because you can take these people out. Because I am concerned that our low rates of saving and investment is one of the major problems in the United States. Unless we deal with it, we have long-term economic decline. And tax policy, I think, has an impact. So thank you for raising that. I am concerned about the hit. And therefore, I'm talking about exempting, and maybe, as I got in trouble with by somebody when I suggested that second homes may, multi-million-dollar. One of the proposals, for example, is limit the amount of interest you could take for a home. So does that help a little bit more? Answering your question?
Yes.
Okay, I'm sorry. Yes, sir.
With regards to your proposed consumption tax, how would a state implementing such a tax avoid creation of black markets? And then kind of the second follow-on question is, what would be the impact on e-commerce activity versus retail stores in terms of the collection of that tax?
Okay, the first question you're dealing with is evasion. And evasion, to some extent, is a cultural thing. Because even under an income tax, you can hide it. It turns out we have a high compliance cost, high compliance in this country, as opposed to Italy. And other places like that. I mean, if you look at the OECD and others, it's a sort of a cultural thing for us. The question is whether there would be less compliance if you had a retail sales tax. Well, I suppose that people could barter and they wouldn't go into stores. If you go to the CBO or other source and say, is compliance a bigger problem under a retail sales tax or a value-added tax than under an income tax? I'm not sure that it is. So that's the first question. The second question is e-commerce. And as you know, there's a lot of issues about that in terms of collecting the sales tax. It goes back to my first point. Do you get more compliance over an income tax than you get under a consumption tax or a sales tax? And I haven't seen any studies that say you get less because you can hide income. You always have underground economy. The extent to which you have an underground economy also gets back to the more fundamental question, and that is, I personally think we're probably one of the most perilous political and economic environments today. For example, I think there's a heck of a lot of commonality between the out of Wall Street crowd and the Tea Party. These are very alienated people. I don't know if any of you read Richard Hofstadter's book at Harvard years ago about the alienation of the middle class and stuff. And that has ramifications of confidence in institutions, including the tax system. And that's one reason I think we have to address tax reform. Did that help a little? Okay. Who else wants to jump in? Yes, sir.
I mean, do you think you make a false distinction between these business rates and these individual rates? Because most small businesses actually pay at an individual tax rate, and therefore they would be included in the individual.
Yeah. What you raise, and the question is, I had to figure out how broad to do that. And if you get to the business side, as you pointed out, there are pass-throughs. And a lot of businesses are not in corporate form, they're in individual form. And where that becomes very, very important in terms of tax reform, because obviously it's a very broad subject, when they're talking about rearranging the deck, what they will do on the corporate side, if you reduce corporate taxes, in the corporate side, you have to pay for it on the corporate side. but you could have a very, and I think 3/4 of business incomes comes from non-incorporated entities. You could reduce the corporate tax rate and not really do what you really want to do, which is encourage business activity, because you haven't touched the individual tax rate, right? And the reason you don't want to do this is because they want to make sure that one view of tax policy, you got to pay, when you get a reduction, you got to pay for it within that area. But this is a major problem, and quite frankly, that is one of the problems with a lot of the proposals, is because people criticize, they use the W. Bozenak issue. You don't want to reduce taxes on wealthy people, but on the other hand, a lot of those tax returns are pass-throughs. So you're entirely right. And if you want to get in touch with me, I actually have other charts which show how this one proposal I was talking about, Simpson-Bowles, affects individuals, and in the business side breaks it down between multinationals, domestic, but also pass-throughs and corporations. Does that help at all?
Yes.
Okay, yes, sir.
I want to raise a very basic question, which is the issue, again, going back to the issue of fairness. Thinking about fairness to the individual versus fairness to the society as a whole, the welfare of the nation. What is wrong if you're thinking about the welfare of the U.S. nation as a whole on raising taxes on wealthier people? And thinking about the idea of rents, for instance. If somebody's willing to do a job for somebody's doing a job for $10 million and he's willing to do it, for $5 million. Couldn't the government just take that $5 million and invest it in broader social programs?
Well, I mean, you really are raising, the fundamental questions about American politics, the role of government, how large it is, transfer payments and all of that. Yeah. And I guess when push comes to shove, I'm really in a sort of distinct position in the quote conservative, and I don't consider, I was talking to Bob, I'm really a radical libertarian more than a conservative. And so what I'm getting at in terms of tax policy, I think personally, because I'm a libertarian, I would like to have smaller government. And that's a broad statement because it depends where. For example, on social welfare policy, I prefer to have a negative income tax than a big bureaucracy. I'm worried about the government being an entrepreneur, venture capitalist, so the things that we've seen in the paper. That I think the private sector is more effective in a lot of things. But where I make the distinction, if you're concerned about people paying their fair share, I would treat somebody differently who takes all his money and invests it than spends it on, I use the example of mega mansions and yachts. So that's where I would come out on that. And I also believe, and it's a judgment, and I'm part of a luncheon group at Brookings, and there's a debate between what we call deficit hawks, like Alice Rivlin and others, who are willing to cut social programs and get in trouble with their constituency because they view if we don't get the deficit under control, the folks who are most vulnerable will be hurt more. So where does that come down, Mark, and where do you come out on Simpson-Bowles, which was $80 billion going to deficit reduction? How do you square spending versus taxes and the others? And I guess there is some aspect of my conservative position because I prefer to do it on the spending side. And if you do taxes, where I'd come out on is less worried about how much the wealthy are paying, but the activity, whether you're saving an investment or consuming. Maybe that helped a little?
Yeah.
Okay. Yes, sir.
How would you address the relative utility that, say, someone who has more resources, so for example, if you're a rich person, you can buy a nicer car that will last longer and run better, and essentially you can get more efficient things if you have a little more money, or just more money, than someone who's poor and essentially has to keep updating or preparing. So there's investment costs that go in repeatedly that if you spend a larger upfront cost, you can.
Well, that's a much broader question. I guess the way I would address it is that I'd like to push a button that says economic growth. And if you get economic growth, those issues may not be as important as otherwise. But let me address it another way. There are two very good studies going on at Brookings. One is social mobility and income inequality. And is the American dream now less of a reality than it was in the past? Is there more social mobility in Scandinavian countries? And part of the answer is, in terms of your question, is relative versus absolute. For example, I don't know if any of you ever have been or want to go to the Kingdom of Lesotho. It's one of the poorest countries in the world. I actually ran there. The king of Lesotho has all the money. His subjects don't. If you confiscate all of his wealth, his ability to buy goods, and give it to all the wonderful people of Lesotho, nothing really changes. And poverty in the United States, in terms of that Brookings study, in an absolute sense, if you're poor in this country, you're still better off than others. But then we get into discussion about Apple and they're exploiting people and la-di-da. So that's one aspect of it, which is the biggest aspect. But in terms of the times we're in, the other study I'm interested in Brookings is what the current economic troubles, the implications long-term, and the impact they have on perhaps a lost generation. In the 30s, remember what happened is people started saving. So if the basic point is rich, wealthier people have more ability to control their lives than others, I think that's true. But then the question is what do you do about it? And then maybe I become a conservative. I'm more interested in opportunity in terms of endeavors rather than results. So that may or may not be an answer. But Bob, I can go on until you throw me out. But
I think we're about throwing out in a few minutes.
okay, yes, sir.
How would you speculate on the political will to achieve a progressive retail tax? Is one thought that was in my head. And are there any other, second question, are there any other significant tax changes? One that I had in mind was maybe instead of paying for the administrative costs of giving the federal government workers their salaries and then deducting taxes, pay them a lower salary to start with and have that tax built in so there's less administrative costs.
Well, remember I talked about the administrative costs when I gave you those examples, which are great. In terms of what the tax reform proposal will finally look like, the contours of it, right now it looks like Debbie Bozenak wins, but on the other hand, we reduce the corporate tax. Again, I think it is so uncertain. As an example, when I started out in 1978, we had what are called defined benefit programs. When you work for a company, you got a check. When you retired, let's say 2% times the number of years you worked. Now, we're all out there alone. None of us have pensions. You guys don't have pensions. You've got student debts. And also when you start working, when you aren't going to have a pension, you've got to save for your own retirement. And the relevance of that is when the stock market went down during the debt crisis, Nancy Pelosi went on TV and said, oh my God, our 401ks are gone. And the political ramifications of that, I think, may come to bear. For some reason, I'm talking about the result, there is a great focus on reducing the tax on corporations in the middle of this crisis. That's not only the rate, however. It's also, remember now they're talking about doing something special for manufacturing. So what I'm saying is, whether it be the individuals all of a sudden saying, hey, wait a minute, I don't want my dividends and capital gains taxed. I mean, there's two aspects of it. One aspect is, God darn it, that's why Warren Buffett doesn't pay any taxes. The other aspect is, hey, wait a minute, we're taxing my retirement, my saving. So I think that will all work its way through the system. It also depends what happens to deficit. It also depends what happens in Europe. I just think it's an extremely fluid situation. Bob, is that it?
Anybody final question? Or?
And I'll be here until they carry me out. Yep.
We'll send them down. Anybody wants to come up and talk to them, can talk to them.
Yes, sir.
So,
I'm sorry. Did
I can talk to you after.
Okay.
You can talk, yeah.
Okay.
So we're good. So I thank him.
Well, thank you very much.
All right. I'm supposed to give you a question. So since this is all very taxes are numbers and everything, and you're all in government. I thought I'd make it.
Bob,
What?
you want to use the
Microphone.
Okay. Yeah, so the question I thought I'd ask, how would you define fairness for the next tax reform law? So give us your view of fairness for that. And that'll be the paper that you email, and I think you have the address, right, to Nicole Kozin?